We just embarked on an epic real estate shopping spree.
That's right, what we did will make our investors and us too millions of dollars.
So we had to make this episode about it because any real estate investor who uses these lessons will blow up their real estate game faster and easier.
But here's the thing, it's not about nailing the market timing, snagging the cheapest properties, investing in the rough neighborhoods, or even having millions of dollars in your bank account.
In fact, it's probably quite the opposite of all those things.
Today, we're gonna dive into the top 10 most profound lessons we picked up during our latest shopping spree.
But before we do that, we need to discuss our little shopping habits first.
Have you guys seen the new Barbie movie? Even you probably haven't. You're probably aware on some level the Mattel mania has swept the country. Pink is the new color of summer, and Barbie is making a comeback like never before.
And man, does Barbie movie have some cool outfits. If you want to imitate some of the Barbie merch, you could probably spend over $1,000 just to mimic a similar outfit.
We love a good fashion moment, so the thought of a vintage Chanel or a complete custom wardrobe has us seeing pink stars.
In less than 12 months, we went on a little shopping spree of our own to the tune of $145 million. And no, before you think we are totally irresponsible, it wasn't at a Gucci store.
Nope. Our retail shopping spree didn't involve designer handbags, fancy sunglasses, or high fashion belts, although we would love that. Instead, we chose to fill our hearts and our bags with a perfectly sized investment.
You see, friends, when we think of shopping, we think big, right? In the most literal sense. It's not about what we can wear, it's about what can wear us, live us, and benefit us financially and emotionally. During our extensive year-long shopping expedition, we're not only check out all those criteria, but we also surpass them.
Our apartment investments not only enrich our beloved investors, but also has a profound positive influence on the world, which is really incredibly fulfilling.
To start this process, take a step back with us in time to 2022 of July, which is when our shopping spree began. Though it seems like a distant memory now, it was during that momentous time when we embarked on the pursuit of a $71 million property.
This sophisticated real estate gem nests in one of Houston's prime market and was under contract for $71 million.
The buying process was filled with unexpected twists, and one of the most notable was the surprise rise in inflation and of course interest rate, a change that the authority had hinted at but had caught us somewhat off guard.
Navigating through this abrupt financial turbulence was undoubtedly challenging, but again, nobody said a shopping spree would be breezy.
Now you might be thinking that discounting shopping is the way to go, but just like Barbie, our vintage Chanel Houston property came at a pretty penny. And in the world of multifamily properties, negotiating with an agreed upon contract is generally looked down upon.
So imagine to our surprise that our lender insisted that we request a 10% discount on our property that were originally under contract for $71 million. Yikes.
When you're dealing with numbers that high, even what sounds like a meager 10% actually equates to around $7.1 million. No laughing matter.
Despite our anxiety, our lender assured us that, hey, if we can try to come back with a discount of $1 to $2 million, that'll be totally doable.
As you might imagine, the thought of potential repercussions with the seller and broker left us feeling extremely nervous. It's a situation no buyers ever wish to encounter.
But at the end of the day, the viability of the loan was on the line, leaving us with no choice but to go back and request a discount.
To handle this situation with tact, we arranged a conference call involving our broker, who was representing both us and the seller, along with our lender. The primary objective of the call was for our lender to explain the situation and the reasons behind our request.
The crucial message we need to convey was that our enthusiasm for this request was minimal. Rather, we felt compelled to this course of action as it stood as the only way for the loan to progress.
Much to our surprise, in response to our request, the seller extended a $2 million discount, but with a condition. We had to raise our earnest deposit to demonstrate our genuine intent to buy the property.
This hard money deposit is non-refundable and serves as a testament to our unwavering commitment to the deal.
In the unfortunate event that the deal did not materialize for any reason, we would forfeit that amount.
That might not sound like a big deal, but our initial earnest deposit was over $1 million, and they asked us to basically double that. At this point, we were in deep. We've already completed our capital raise.
We had successfully raised $34 million for the deal. The money was in the bank, and we were ready to proceed.
You see, typically the purchase price is settled upon during the signing of the purchase and sale contract, while the loan terms are finalized in the last 2 weeks leading up to the closing. However, our circumstances force this conventional process to shift direction.
Because of our lender's demand for a discount, we found ourselves in the position of renegotiating the purchase price after the contract has been signed, introducing a challenge aspect and an additional layer of complexity to the deal.
Thanks to a round of nerve-wracking negotiations, we managed to secure a $3 million discount on the property, which then actually was appraised at $78 million.
Talk about an epic start to our shopping spree.
Fast forward 11 months later, in June 2023, we find ourselves celebrating the successful acquisition of yet another property.
This time, our focus led us to an astonishing $77 million property in an unexpected thriving market of Northwest Arkansas.
We bet Arkansas didn't immediately come to your mind when you're thinking about thriving real estate markets.
Not at all, not for us initially too, right? The purchase of this impressive property, boasting a mixed-use component, was made possible through a unique insight in an undervalued market. Our capacity to raise an impressive $38 million in private capital and our strategic decision to take on a substantial loan at a fixed 3.49 interest rate.
This move proved to be a lifesaver considering the state of the capital market during that period.
And we are so grateful for the remarkable opportunities that arose from our $145 million shopping spree. Throughout this journey, we have not only established credibility with brokers and sellers, but we also provide our passive investor with high-value investment prospect.
It's been a path adorned with professional growth, learning, and an abundance of excitement.
But we aren't going to stop there, right?
In true entrepreneurial fashion, as we set our sights on the future, we're filled with eagerness to embark on this upcoming adventure. This journey may look like forging strategic partnerships or venturing to uncharted territories for further growth, and we're thrilled to discover the currents of finance that will lead us.
And who knows, maybe in the upcoming year or years, our $145 million shopping spree will appear as a mere routine compared to our new achievements.
For the Kitty Sisters, there's no bounds to what we can achieve. The sky is the limit.
Keep in mind that our June 2023 shopping spree was definitely more of an adventure than a simple errand, and we love it that way.
By keeping an open mind, we found ourselves venturing to promising yet somewhat overlooked territory of Northwest Arkansas.
Imagine our surprise to discover a thriving metropolis blooming with economic vitality and potential growth.
And this magnificent $77 million property is no ordinary apartment complex, but a beautiful fusion of residential and commercial spaces.
The state-of-the-art marvel completed in 2021 had barely even had a chance to thrive when we set our sights upon it.
To seasoned investors like us, the mixture of the 18 retail spaces mixed with the traditional residential settings provides a unique commerce opportunity within its very foundation.
Even better, the property has this idea of live-work units, a unique concept that envisions living and working within the same building, blending the two seamlessly.
This innovative approach proves invaluable to small business owners, law firms, psychiatric practices, startups, and various ventures, offering a flexible space that caters to the professional and personal requirements, and we can't wait to be on the cutting edge of this movement.
Finally, what really sealed the deal for us was location, location, location. Nestled in a highly desirable area, the property attracts the eyes and the wallets of those who appreciate a perfect blend of convenience, luxury, and style.
So you can see why we didn't want to miss out on this gem.
An unforeseen stroke of fortune came with the purchase, the opportunity to assume an existing loan, and not just any loan, but a coveted housing urban development HUD loan.
This property boasts a remarkable low fixed interest rate of 3.49%, with a substantial 38 years remaining, fully amortized no less. In an era where interest rates soars by 6 to 7%, this loan really has it all.
So you can see why it's so important to have a loan assumption strategy so you can avoid a high interest rate that deter many investors from the market.
Keep in mind too that anytime you're making a business decision, it's more than numbers and spreadsheets.
This one showcased not only our dedication to our incredible passive investors, but also our unshakable belief in the untapped potential of overlooked market.
We transform a missed opportunity into a gateway to an even more remarkable one, scripting a new chapter of boundless growth in our narrative.
Yeah, and this acquisition extended far beyond just an addition to our multifamily apartment portfolio. It represents the forging of a new path, the cultivation of invaluable relationships, and the broadening of our horizon.
And of course, it was another stop along our way on this exciting shopping spree.
As we close out today's episode, we want to take a moment of reflection and gratitude. Sharing these stories with you guys is deeply personal for us, but we never want to take for granted the opportunities that comes our way, whether they are $77 million property or $145 million or any number in between.
We wouldn't be where we're at today without our investors, the moments of professional growth we've had, or the opportunities for learning.
That's right, Palm. As we look forward of what's next, we eagerly looking forward to our next adventure.
Whether this involves pursuing partnerships or exploring new avenues for growth, we're excited to see where the winds of finance takes us. And who knows, maybe next year, our $145 million shopping spree will seem like just another day at the mall.
But right now, we're going to pause for today, enjoy the moment, and wrap up today's episode. Maybe we'll even go see Barbie and, get some outfit inspiration.
Until next time, keep thriving on your journey to success.